All attendees are in listen-only mode.
Good day, everyone. Well, we've got a market that is having some retracement after shooting straight up from its lows for several days, and so the Nasdaq is now about 1% off its peak. But you've got other indices like the New York and the Dow that are sitting right around their 200-day moving average as they've been lagging the markets. Nevertheless, we have leading stocks that have become actionable, and they seem to be holding up relatively well. So we let the stocks tell us what to do, especially in a market that has been going sideways for many months now, especially if you look at the S&P. That pretty much has been dead on sideways since November in a choppy, frothy way. So trying to time markets has been, I think, one of the most difficult in potentially decades. But these sorts of periods do come to an end. In the meantime, as we've said and as we've shown, there's a number of actual names which have been profitable. Just go to the first one here. We have G-Pro. There we go. And now this one, we put that one on the list on the 20th. So that would have been on its pocket pivot right on this day here. And since then, it's moved higher. Bring attention to this one because it's coming off relative lows, somewhat of a bottom fishing name, and you got to be careful with these. So you have to be more diligent, I think, when you have gains in these sorts of stocks like you have right now. Sometimes you want to just take your profits and move on to the next one. Yeah, it did have earnings, and it looks like the market decided sort of neutral to the earnings report, but it's moving higher today. And let's see, we put it on the list. It would have where is it right now? It's 64.6. So yeah, you're seeing about a what 5 or 6% gain in this. But I keep your stops real tight because these sorts of formations off their lows are subject to backing and filling. And so on these kinds of names, you want to be tighter in terms of where you take your profits. Then you get names like ADPT. And this one we put on the list when it had a pocket pivot on the 16th. So that would have been, let's see, that would have been here on this day. Pocket pivot came back up through the 10-day, and then it had a high volume day straight back down. So that's a natural point where you would say, okay, I'm selling this one before the selling got so bad, before it hit 90. There's nothing wrong with you taking, it's just, okay, you bought it, it's not working out, let's take a few percent loss, move on. But today reported earnings, and it's gapping up, and that is a viable gap up there. And part of one of the challenging things of investing is if you sold a stock, if you bought and then you sold the stock just a couple days later and you sold it at a loss, to get right back on board, like on a day like today, it's very tough. It's psychologically difficult. But you have to remember the market doesn't care where you bought it or sold it. So you have to look at this trade today as a fresh trade, and you have to say, okay, well, is it within my risk tolerance parameters? Is it viable here based on my strategies? What's my portfolio exposure overall right now? All these questions should go through your mind, and then you can make a very objective decision as to whether this stock should be added to your portfolio. But certainly don't base it on having lost if you bought it on the 16th and then sold it on the 21st when it took a dive. Don't base your decision making on that action in the stock. And overall, like we said, it's the earnings are they're skyrocketing. The sales are triple digit. The group rank is number 2, so that is a very powerful ingredient because studies have shown, mine included, the group rank of a stock has 75% to do with how a stock performs. So if your stock is sitting in the top 10 or to top 5% of industry groups, that's a good wind in its sails. So weigh all that in and then make your decision. Then we've got another stock, GTN. And this one had a pocket pivot on the 13th when we added it to the list on that day there. And what you'll notice is in the overall formation of GTN, when it traded all the way up close to 18, actually it hit 18, in context with this chart, that's probably where you want to be selling it into strength, because it's probably not going to give you so much more to the upside. It could, but again, it's the market of taking profits, and if you took profits right up around there, that would have been a quick, looks like a quick 9%, which is great on a time value basis because it only took you a little over a week, or a little over, yeah, it looks like 6 or 7 trading days to achieve that kind of profit. So always keep that in mind. Yeah, it would have been about a 8 to 9% profit. So time value is a big factor because you sell it. If you sold it close to 18, then you've got that capital to redeploy into something else. You just keep turning over your capital in that manner. And as the months wear on, you might find yourself up a nice, 30, 40, or even 50% for the year. And there actually have been some people who have done better than that because they happen to hit the right stocks. But overall, just keep that in mind. It's always a kind of it's a grinder's market where you kind of grind out your profits. So your discipline has to be on the nose in terms of your buying and your selling discipline. As far as commodities and gold and that sort of thing, we're gold. Well, oil's nearing some significant multi-year lows. Gold has hit multi-year lows. If you look at the basket of commodities, the CRB index, that looks like it's about to hit multi-year lows as well. So that sort of implies perhaps the global economy is not turning the corner. China's had problems, and people are worried that China is going to not exert as great a demand on commodities while it's dealing with its own issues. So I think commodities are telegraphing that to us. And as far as interest rate direction, again, I think the Fed is not going to make a move until they see ample evidence. But in the meantime, they have to posture and say they're going to make a move and they are going to be diligent. And also that tough Fed speak helps prop the dollar further. Because if market expects interest rates to rise, that's good for the dollar, and the Fed has sort of a duty to keep the U.S. dollar strong. It is the tallest standing midget, and the U.S. market is also the tallest standing midget because you can compare the S&P or the NASDAQ to say, well, IEV, that is a basket of European markets, and you can see here on the weekly that it is nowhere near its highs. It's been having a tough time of things since 2014. And if you look at world markets, if you look at the Chinese market, FXI, for instance, it's certainly had quite a bit of a bubble there, especially if you look at the small caps. And then now it's had quite a tumble. Yeah, there's no point in going to if you go look at Russia, look at British markets, all these things, they're well off their highs. So the U.S. is the tallest standing midget, and I think the Fed has kind of a responsibility in their heads to keep this Fed speak going so that the dollar and the U.S. markets can stay strong. So with that, I will turn it over to Gil.
Yeah, I think this market's looking a little bit shaky here right now. You can see the NASDAQ breaking out to a high again last Friday on a big gap up, and of course that gap up move was associated with negative 2-to-1 breadth, so you had advancing stocks versus decliners 1-to-2. So for every stock going up, there were 2 going down, and I was a little bit curious seeing that sort of action as the Nasdaq's gapping to a new high, and of course everything is glorious, and the pundits are and the news people are all having a good time with it as they see the market go higher. But I think you're basically still in this trader's market. You're reversing today, and I think you could come lower. Head down to the 50-day wouldn't surprise me. I think the key here is with the broader market, you can see the New York Composite Index has now broken through the 200-day, and it's acting a lot worse than, say, the NASDAQ or the S&P. And I think that this is telling you that we may be headed lower, and you can see this sort of weakening pattern even as the other indexes have tried to move to higher highs. You can see the divergence pretty clearly here between the NASDAQ, which has been led mostly by big moves in stocks like Google and Priceline and Amazon, and just a narrowing number of big cap names. So to me, this market looks like it's in trouble. And I think where you have a situation like, I came in long some GoPro today, and I sell into this move, and yeah, it may go past me, I guess, but I'll sell into this. I also came in long some Netflix, and that's not really going anywhere, but maybe it meets up with the 10-day moving average on a pullback. But I think that the market may have more downside here with the NASDAQ heading to the 50-day moving average. That would be, logical, and would definitely be within the scope of what we've seen in prior pullbacks. So whether things develop into a longer-term bear market remains to be seen. But you still have all this QE out there, and everybody's printing, and I think it just makes things slosh around. Now, I think looking at the Chinese market, that whole thing is just a massive prop, and it's all just BS. They're outlawing selling by 5% holders. They're telling the banks that they have to buy stocks. They're letting insurance companies buy stocks. They're letting people mortgage use their apartments and real estate as collateral for stock buying margin. What is that a sign of? I think plain and simple, that's a sign of a bubble. That's a sign of rampant speculation that's on the level of what you saw in 1929. Except it's in China, and I think that's a potential issue, because if the Chinese government shuts their markets down and doesn't let anybody sell there, then guess what? When you can't sell what you need to sell, you sell what you can, and I think that could create more downside for the market. So all that is to say, my approach to the market is a bifurcated one. I'll be long something, and then I'll go short something and try to make progress that way. It's a lot of work, and I would say it's not as great a return as just buying a couple of big leaders and letting them run like you could. Well, last year it's possible to do that, and there's been a couple that have moved this year, but a lot of the trends, there are no trends really. The trends are short, and you sell into sharp upside movement. And as an example, I like the GoPro was a buy here. You get a pocket pivot here. Volume dries up on the pullback into the 50-day and the 20-day here. You could have bought it there. By the time earnings came out, you're up here, and you're up 10, 12% on the position. You actually could have sat through it, even though I think after they came out with earnings, the stock dropped as low as 57, a little bit of what I would call a cardiac type of move, give you a heart attack. And then by the end of, I guess by the time things closed up at 5 p.m. Pacific time, when after-hours trading finished, the stock was back up, mostly, I think, unchanged. We're a little above 62 by the time all the dust had settled. So it held tight yesterday, and it moving higher today. There's still a lot of shorts in this thing. Short interest ran up from about 9.8 million to about 11.2 million between June 15th and June 30th. So there's still a lot of shorts in this thing just getting raked. And you can look at this sort of as a cup with a low handle. Maybe that's a pod with a low handle breakout, and maybe this does roll over here. But if I get lucky and I have something up nicely for me, I'll go and just sell it and take my profit and try to hammer it out that way. And in most cases, I think if you look at where something was buyable and then where it is now, so I look at GPro as buyable here, and now it's here. You could sell into that move. I think. Somebody says, I'm not sure what you mean, Scotty. Sell more oil, copper, gold, iron ore. I would look for, I don't know if you, I think what the commodities are telling you, including gold, we know that everybody's still printing, And I don't think the Fed is really going to end up raising interest rates, even though all the pundits are saying that we're going to see an interest rate increase in both September and then December. So, I'll believe that when I see it. But I think they're pretty much stuck, so I think the dollar will eventually come off. I think right now it's coming down versus the euro and the yen. But I think this is a canary in a coal mine to the extent that it's telling you with commodities just deflating rapidly, it could be a liquidity issue. If not, then it's telling you that the economies, global economies, are slowing down everywhere, and we're in for some trouble. So I think that has to be heated that way. I do think eventually gold will find a bottom and then turn higher, but that may take a little while because we've seen other periods if the market does get into trouble and if we do run into liquidity issues where you have forced selling as institutions have to raise cash, then I think you're going to see gold continue lower, at least maybe down to 1,000, maybe just underneath. So someone points out, Scotty, you're on a roll this morning, aren't you? If you can't sell your Chinese stocks, sell your commodities. They are assets too. That's right, Scotty, you got it. Somebody's asking about NXPI. I think I'll get down to what I'm doing this morning. I'm actually short. I got short Apple. I tried to short it yesterday, but never really got any real juice on the downside. There was a couple of 620 signals that didn't pan out. But this morning you get up to this confluence of the 10-day, 20-day, and 65-day exponential, and you're underneath this area. So look, I was watching it on the 620. Let's see if we can pull that up. Here we go. Whoops. Where'd you go there? One more time. It's here somewhere. There it is. Okay. Let's see. I'm going to go 5 minutes here. Here's your 620 sell signal right here. You actually had the MACD cross was up here, so you could have shorted it. I'll use this as an early sell signal sometimes. I find that it gives me a little bit of an edge, but if it pushes back against me, I'll just cover and go away. I don't hang around, and if I short something on a 620 now, what I would do is use a 620 buy as a trailing stop probably, or just use my entry point as a stop if I'm testing the short side looking for it to reverse. My theory on Apple is that you've now had, let's see if we can make this bigger. We can, imagine that. We've had 1, 2, 3 breakout attempts, all of which have failed. So the rule of 3 says that either this one's going to work or it's going to be 3 and out. So I think you may be 3 and out. Now, of course, you do get a rally yesterday because you're bouncing off of the 40-week line on the weekly chart. You can see that right here. So that made sense to me, and I wouldn't have been shorting this thing yesterday at the open. You're looking for some kind of a bounce, and given the fact that Apple is such a broadly and widely loved name, and of course I'm sure all the retail investors out there yesterday were either calling their brokers or logging on to their online ordering platforms and buying Apple because it was, quote, cheap or on sale. But I think you're going to see the law of large numbers work against Apple longer term. And this latest big volume gap down is just part of the same cycle of selling we've been seeing for a while as institutions lighten up, at the very least, lighten up on the stock. They have to have a weighting in it, and some of them have had a pretty big weighting, so you may start to see them sell that. And it wouldn't surprise me if you saw it break the 200-day at some point. But for now, I'm short the stock. Going to use the high of the day as a quick stop since I'm short very near there, and see how this goes. But that's how I'm going to play that. And I think the question here is whether institutions that are long the stock, they know that they're going to get buyers trying to buy it cheap. People don't really understand how leading stocks top will try and buy this thing. And the interesting thing to watch for, rather, is whether you see institutions using this bounce as a method of handing off the stock to either the retail investing public or dumber money managers or value managers who are trying to buy it on the cheap. But I think you can consider the fact that Apple's been selling at 15 times earnings for a while. 15 times estimates actually, and a lot of people say, oh, it's cheap, but it's actually telling you that the market does not place that much value on Apple's forward earnings stream, which is a warning sign. So that's that's a problem in my view for Apple, and I'm happy to concentrate on this as a short sale target because it's very liquid. I can come in and out of it very quickly, and It's a big stock. If the market goes down, it's going down with it. Meanwhile, I'm short this one as well, hitting at the 50-day moving average. Skyworks Solutions, you can see on the 620 got a sell signal right around the 104 level, which is where the 50 days at 104.15, I believe. So you could use the high of the day as a short. Now these guys come out with earnings after hours, and it's rallying ahead earnings, and you'd wonder why, and that's because ARM Holdings, which is another supplier to Apple. So Skyworks is a supplier, NXP is a supplier, and I'm not sure if Avago is, but they're in roughly the same group. So RMH rallying to the 200-day. Watch this. I think could be a short as it comes up into the 200-day moving average here, and you can see this as a late stage, sort of a big cup sort of pattern here. But here you can look at this sort of as a ladle with a handle that's failed on a reversal on the breakout attempt. And now you're rallying back up into the 200-day, so this may become shortable. Maybe they all come apart again when SWKS comes out with earnings and they miss or something. Now, NXP, this is one I talked about as being a short right here along the 50-day with the idea that it was going to break, and it did. And, of course, you hit the 200-day yesterday. That's your downside target. So if you were short the stock or had a short position anywhere in here, that would be your maximum downside target, and you should stay disciplined and buy, cover the position at that point. Then you can go on to something else. And of course, you get a nice rally up to the 20-day, and it's sputtering. I think they come out with earnings. Is it today? I wonder, Dr. K, you know? Let me check here real quickly.
I'd have to check because I don't rely on.
No, you can't rely on
Wanda
Wanda because it's always wrong.
do a very good job of it.
Let's see.
You have to basically go right to the news source.
July 30th,
Do
so next week.
Sort of PR.
Next Thursday. So let's see. Another one that looks kind of interesting here. Of course, you got NXPI, you got Avago is another one, and that was also a 620 short here this morning. There's a signal. So these all kind of hit together. I think NXPI was the one that sort of lagged a little bit, but they've all given you 620 sell signals to go short on, at least on an intraday basis. Maybe I'm just trading these. In fact, I'm guessing that I'm probably just trading the SWKS as a day trade and a cover before the close because I don't really need to play earnings roulette. It is very rare that I'll do that. Now, let's say if it drops 10% before the close, maybe I'll hold some into that. Some other names I'm looking at on rallies. BMW came out with earnings. They jacked this thing yesterday. I'm not sure why. I guess because they didn't do as badly as they thought they would. But you can see on an intraday chart, you're kind of getting a 620. It's a little dicey because you do get this strong move, and you're not quite sure where you're going to get resistance in here. So it may be higher, maybe lower before you start shorting it. But it's kind of hanging in there. It's possible to put something out here using the high of the day, which is only 87.90 and change, somewhere around there, as a quick stop. So that's pretty controllable. Maybe this rally does become shortable on that name. F5, you're seeing a number of the telecom names moving today. F5 is a big gap up. I wouldn't buy this kind of a gap up. It's stalling and probably was a short earlier, and it was right there. So around 129 and change could have been shorted. You're also seeing Infinera running, and it's gapped up and moving higher. So this stock is actually a big pain in the ass, to tell you the truth, because you buy it here, it runs up, and then comes all the way back in. So now it's up here, gapping up. For all I know, it's just a short. Let's check out, as long as we're looking at these, that's Juniper Networks. That's a short. Finisar, similar group. Oh my God, that's been a short for a while. And then I think another one that started all this was AFOP. Yeah, there's another gap up there. That looks pretty nice, but again, it's a choppy pattern, moves up and down 10%, and just not really a stock that you're going to stay with any more than, say, something like this in my book. I mean, it's just, what says you run up from here to here is 20, yeah, about 15%, and then all the way back. So it's a piece of junk. Somebody says, let's see, some question here. Greetings, Gil and Dr. K. Does F-Fit look constructive? I don't know. Were you going to buy that? And what do you mean constructive? I don't really understand, because it's sitting at the 10-day and volume looks like it's lighter right now. That thing's way up there, and it's an IPO. I wouldn't be buying it here unless you're a moron. So constructive, please. Yeah, it looks constructive. Just sell your house, your wife, your kids, your car, all your assets, and put it into fit right here because it looks constructive. You know, that's just way too far up there. And to think that it's suddenly just going to keep going higher is a little bit like thinking, you know, when Sedge is up here and you're trying to buy this, you know, it's had a big move. So get over this idea that just because something's moved like this, it's suddenly going to take off and do the same thing and double again, or go up 50% or whatever again. So that's kind of, to me, that's kind of naive, and it shows that some people operate heavily on greed rather than common sense and understanding a very specific method in terms of handling stocks, particularly in this environment when things will give you a nice move and then that's it. If you think you're going to play it for more, then I think you're just being dumb. All right, does that answer your question? Pardon my bluntness, but it is my trademark, so I do have to kind of live up to that. Let's see. Any other brilliant questions while we're at it? No? Okay, let's go through some more. I'm looking at Yahoo. Looks like a short to me. You're at the 20-day. Kind of rallied back up, so I'm short this thing here on the 620, and there it is. Bingo. Getting a little bit of love right now, so that's one to be short. LinkedIn also was a short yesterday. Early in the day, it gapped down 228, 229. It traded, and then and to me that looked shortable, and then it broke the 200-day and then bounced a little bit. This morning it bounces right back up to the 200-day. Thank you. You short the hell out of it there, and you get a break on the 620 here, but you know, could have been shorted up in here. It's actually hitting it around 227 and change. I held a tiny position, a couple hundred shares overnight, so I generally don't hold positions overnight unless I think I'm in a good position to do so, either profit-wise or I'm not really too concerned about the stock gapping against me. In this market, you know, you can get gap ups and gaps down, or is that gaps up and gaps down at any point in time. So, you know, expect the unexpected. Anything can happen. So I tend not to want to hold huge positions overnight because you don't want to get caught in a gap down. I mean, it's always nice when you get caught in a gap in the right direction, which is nice, but it seems like a lot of the profit potential in this market depends on doing just that. And I don't really know if that fits my particular risk profile, despite the fact that I tend to be manic anyway. So take it for what it is. What caused a quick sell-up at 11 today? You mean 8 today. I think it was, I issued a bearish report on the market. So I think I didn't, okay, didn't I IM you earlier and said go to a sell signal on the MDM? MDM's still on a cash signal, right?
No, it's been on a buy signal.
Oh, so it's on a buy signal. Oh, okay.
Yeah, they went on a buy signal a few days ago, so it's still should still be profitable. But this is, you know, we went straight up from lows, and now it's pulling back, and there's, you know, it's a QE-driven market still, so the model still remains on a buy for now.
Okay. Well, my guess is it's going to go to a sell pretty soon here. That's my guess. But
if it gets worse,
of course,
it might go to cash if it gets much worse.
All right, let's go.
But the thing is that these markets, as you know, it'll take a few steps lower, and that'll be the floor, and then it'll start going higher, and or in a sloppy way.
Right.
Well, it doesn't really trend in general. This is a non-trending environment.
Right. So why not just stay in cash then? Why even bother trying to go to a buy or a sell when nothing?
Because
there's no coherence.
Because tell me how to predict that the market is going to go sideways for a few months ahead of time. It can't be done.
You need to.
At least I don't know anyone who.
If you have a time machine, I think you do it. Anyways, yeah, you're right. So, blah blah blah.
Time machine. I love the idea. Still working on that.
Dr. K, where is the VIX model? I think it's on vacation right now, isn't it? Or where is it?
Oh, the XIV you're talking about.
Yeah, I guess so.
Yeah, no, that's like I said, that is it's been working well, but I want to get more time on its side so that then I can just go ahead and release a beta of it. But so far, so good.
All right.
I'm happy that it's been able to work well in one of the most challenging markets, as that as concerns market timing. So I'm quite surprised. I mean, I've been using my own account to trade it, so it's in real time and everything. And my account's up about for the year trading the XIV purely on this one particular account. It's up 16%, which is quite surprising to me, frankly, because like we all know that these sideways markets are killers. But what I've noticed is that once this sideways ends and we start trending again, based on my back tests, I wouldn't be up 16%. I'd be up something like 60 or 70% by now, if not more.
Right.
So yeah, I'm just waiting patiently for this sidewaysness to end. That's part of the reason why I'm not bringing it out yet. I just do want to see that it can still baby step its way higher in this treacherous environment.
The cybersecurity stocks are on the move today thanks to Fortinet, which came out with earnings and blasted to the upside. I noticed you had a pullback earlier. 46 is your low, and you're in a Bible gap up position. The last time it had a Bible gap up, it closed mid-range and then went sideways for a period of time, and then slowly worked its way higher, slowly. And again, this is a stock that seems to get its best moves when it announces earnings and gaps up on that basis. So that sends cyber up. But here's the thing with cyber, this could be seen, I guess, as a bottom fishing pocket pivot since it closed at the 10-day yesterday and it gapped up. Given the volume levels, looks like you're going to clear, yeah, you're clearing a pocket pivot right now, but you have too much overhead, and it may just be that this is a late-stage failed base and you're rallying into the 50-day. So let's say if you did buy it along down here, in fact, I was talking about buying it around the 150-day moving average. That's actually where it found support. Let me actually throw this on here. And I used two moving averages that are outside the realm of this typical O'Neill dogma. I use a 65-day exponential, the black one, and I also use a 150-day simple moving average. It's actually used by a lot of people. I think Stan Weinstein is one guy that uses it. I know the founder of DecisionPoint.com, Carl Swenlin, uses that. I think he also uses the 100-day. But I've noticed when stocks skid past, say, the 200-day or the 50-day on the upside, usually the 150-day corresponds to a skid past the 200-day, and vice versa with the 65-day and the 50-day, or similar action with these two, when the 65-day is above it. So, for example, you can see LinkedIn skidded past the 200-day here and it hit the 150-day moving average, and then it broke down. So I'm always watching those because, to me, the standard moving averages, 50-day, 200-day, everybody uses those. Everybody sees them. So there's kind of a Heisenberg principle behind all this. I look at moving averages as fuzzy zones rather than lines. You guys know this, those of you who've been around for a while. And if you want to define them, the zone, you can use some varying moving averages, and it kind of gives you a band. So, you get a band in here. That's where this topped out. But we look at, say, a cyber. You can see the 150-day moving average is where it found support on a retest here. So that could have been bought there, and if you were feeling really lucky, you could have held it overnight and hoped that Fortinet didn't miss on earnings and send it and end up going sharply to the downside. But it could. I would be careful here. I think if you bought it here, I might take that trade. It's about 10% now, and the 50-day, watch see how it acts around the 50-day. Some of these, and this also has sent FireEye up. But let's see, is this going to be a pocket pivot? Yeah, it looks like it. But I don't know. The position here, you came down to the top of this base here. So here's the base. Here's the breakup point here. And you pull back, you retest, and they're trying to go. I don't think I'd buy it up here. If you bought it along here, I think you're doing okay. But notice how it holds roughly along the 65-day exponential on the pullback. So, those two moving averages I use. But like anything, it's a guide, and I've learned how to use them over time by actually using them. Screen time, as we call it. Let's see. Somebody's asking about INSY. You're taking INSY up over 200% on what looks like a short squeeze. What's my take? I don't know. It's up exactly what you said. I don't have any take on this, so I probably wouldn't be messing with it either way. It's just kind of crazy. So I have no advice to offer in that regard. Do you, Dr. K? What's your take on this, other than the fact that it made a high, it broke down, it's gone to a new high. It's kind of pulling an AMBA. Look at that.
It's a big mistake to try to short something that's going to new highs, because you're going to encounter a lot of volatility, which translates into added risk.
Yeah, I wouldn't try and short
If you
this.
bought it and you're sitting on a long position in this, it looks like it's getting ahead of itself, so you might want to look to start taking profits.
Let's see. Our friend Gar says, I did buy some cyber a bit higher than 150-day moving average at 56.40. Sold half the position earlier this morning. Thanks for posting that last week. You're welcome. Yeah, that's good. Good to hear, Gar. So he bought it at 56.40. So right in here, not exactly on the 150-day, and he's selling into this move. So he's getting a 10% plus move today. I'll take that. You know, I should have done it. UVE. What is UVE? Universal Insurance Holdings. I don't know. It's insurance stock. I'm not going to buy this. So I don't want to buy anything right now. I don't see the market. I think that, like I said, I think the Nasdaq's headed to the 50-day. Then when we get there, talk to me about buying some stocks. Maybe if some things are set up. There were some things to buy. You know, some things I've played Zebra. You know, there's a pocket pivot here, and then it dried up along 20-day, and you had to move up towards the highs, and it's coming back in here, and earnings coming out, I think, what, in a week or two, early August, I believe. You know, those are nice trades. There's a lot of that happening. But I think at this point, I'd rather lay back and either be short some names and see what happens. And so far, I'm actually doing okay. Apple's coming down more. Yahoo's coming down more. Skyworks pushing down a little bit. LinkedIn coming down lower. BMW coming down lower. Avago coming down lower. Keep an eye on RMH. I still think this one's possibly shortable at some point. Let's take a look at this again. You see how it's hanging up here? It looks like it wants to go higher. So hang back on this one. Sometimes you'll get an initial 620 sell signal. If it fails, generally I just cover and go away, because that's telling you it probably doesn't want to go down, and maybe you're going to get one later on in the day. So Dow down 111 now, Nasdaq down 20.81. After, wasn't it up something like 22 points this morning? Amazon after the bell earnings, that could UVE. We'll go back to this. This is garbage. I don't understand why you're even looking at this. So up and down, you know, large percentages, and choppy and sloppy, and I don't know. At least on the daily chart, that's pretty good move. 10% swings here. You don't really see it on the weekly here. Here, maybe I can make it look a little less, so a little more. There we go. How's that? That's more volatile. Let me mess with my settings here. Anyways, but I don't know. I wouldn't mess with this. What does it trade? 272,000 shares a day. Nope, kind of junky. I would, and like I said, I don't think I'd want to be long anything here. I'm short. You know, I am 100 and yeah, this could go to 0 by the close. So I'm about 145% short right now. So yeah, I want to buy stocks. And the longs I had this morning, if they were up, and even if they weren't up, like Netflix, I just tossed them. Said, here, thank you. Take my points and go away. FB, good question. FB. Now this is interesting because this thing just went nuts, you know. And it went right up to the 100 level and stopped at 99.25, which I thought was pretty interesting, because you wonder if the century mark becomes resistance, and then hence it's a shortable name up in here. So I actually thought about it at the time. I should have shorted it. I'd be making a little bit of money on the downside. It's coming in. It looks like it's headed for the 10-day. They got earnings next Thursday, I believe, the 30th. The 30th is next Thursday, right? In any case,
yeah.
So you know that was a great stock and acting well while the market's correcting. But there's always one or two of those, you know. And if you don't own them, you're always pissed off. And if you bought it here and then sold into this move, and you're happy here, now you're pissed off here. And you know the stock market is always going to frustrate you if you get hung up on being frustrated or happy or sad or whatever, scared, you know. Somebody tells me they don't want to short Apple because they're afraid they're going to announce Apple TV, and I'm thinking to myself, number one, fear is not an investment strategy, and number two, didn't Apple already announce the Apple TV? Is there some new drone-mounted Apple TV that's coming out or something that's going to drive the stock a lot higher. I think it looks done to me, and if it reverses today, this thing may be heading back to the 200-day. We'll see. Are you short Netflix? No. And I only answer that because I'm in the mood to and I don't have a position. So, but you know, I don't know, maybe it is shortable. The ugly duckling, beautiful swan theory, you know, so use the ugly duckling in reverse, buy the ugly duckling, short the beautiful swan. Calm, is Monday's action an iceberg or supporting action? I don't know. Iceberg, you're using IBD speak, which a lot of it I don't really understand, and I think it's mostly BS anyways. Iceberg, I don't know what an iceberg is. All I know is it did sink the Titanic, but all of this labeling of certain little patterns as being meaningful without being specific regarding the actual action you take at a particular price point, to me is all just BS. So I don't know what an iceberg is, but I'm not going to be buying this stock here. I think if you own it down here, you could have considered taking some profits in what looks to me like a climactic kind of move. I mean, if you look at this, up, 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 and then you get this move where you're up 1, 2, 3, 4, 5, 6 days in a row, huge price moves. I don't know. You could say 6, 7, 8, 9. So 8 to 9 days in a row starting here, and you have huge price moves in the pattern. That looks like it could be a climax top. I sure as hell wouldn't be buying this thing here. So, let's go down the line. Sedge, I'd had some hopes that Sedge might hold the 10-day. I got lucky. I bought some right here, and then the next day they gapped it up, and I started looking at this again. It almost looks like a fractal head and shoulder. So something that's so hot now becomes so cold, and it's looking so ugly. And I'm glad I sold into this move and took the points, and now the thing is coming down. It looks like junk. But, you know, a lot of these were moved on Tuesday, I think it was, or Monday when it was announced that Sun Edison was going to buy Vivint Solar, which I guess you had to buy. It looked very similar to Sedge, actually, right here along the 10-day, and then it jacked out. I guess that was the one to be buying on this pullback. Any other brilliant questions? Don't be shy. You can handle a little abuse. Come on, step forward. Okay, what else? Let's go through some other stuff. I liked Shop was a nice trade this morning. You get this bottom fishing pocket pivot move, I guess, and then you run up and then you pull back to the 20-day, you buy it here, and then you could have sold it back up around 34. Nice little trade. But the one thing I don't like about this is that it's not really a roundabout because it hasn't had time to round out. And before this pocket pivot occurred, the stock was still pretty damn volatile and not really the sort of tight action I'd want to see leading into a pocket pivot. It's a little choppy in here. So Shopify, they make a platform for e-commerce for medium and small businesses, I guess. And I guess there was a, is it Etsy? I guess that it started moving the other day with Etsy. Of course, that's a one-day wonder. And if you did buy this stock in here and you caught that by some miracle, which I wasn't even looking at the stock, it's a piece of junk, came public here and has been going lower ever since. But, you know, that's gone now. So it's now over 20% off the peak of last Friday. So, but I think that's what got Shopify moving. And eBay, I think, was moving too last week. It's still hanging up there, but they spun out PayPal, which you might keep an eye on if it sets up in here. But it's looking, you know, that's the weekly chart. I can't make heads or tails of this. But that might be a name to keep an eye on over the longer term at some point. Somebody's asking about Dunkin' Donuts. Dunkin' Donuts, I don't know. It pulled to the 50-day on heavy volume. So what am I supposed to tell you? Stock broke out as a big ugly base. I don't know. You know, what's your trailing stop on it? The 50-day? Are you using the 50-day as your selling guide? Are you using the 10-day, the 20-day? Seems like one should be able to figure it out if they own the stock. I sure as hell wouldn't be buying it here. So, like I said, I'm not going to buy anything here until I see the markets either settle down or hit, or at least get close to an area of support. In this case, I'd look for the 50-day on the NASDAQ, and well, S&P is right at the 50-day. So, you know, but I think you got to see the NASDAQ come down there since that's what's been leading the market. S&P is going to break the 50-day. This is my scenario. I have a crystal ball just for those of you who want to know. I went and I got my crystal ball that I had pawned off a few years ago, and was able to get it back from the pawn shop. So, anyways, let's see. Any brilliant questions? I wouldn't buy GoGo. That's a piece of junk. Somebody was telling me, emailing me or something, Twittering me or something, I forget, that this looks like it wants to go higher right here. And I'm thinking to myself, what are you smoking? Because if whatever you're smoking, I sure as hell don't want any, because that's not looking good. What that's looking like is a break to the 200-day, a feeble wedging bounce. Okay, and they're talking about a voodoo action in the 10-day. Yeah, sort of reverse voodoo action. So you'd short it there, and it looks like it's coming lower. I thought, you know, the airlines look like they might be turning. They were trying to turn here, but notice how UAL up to the 60 level and the 200-day moving average today. That was a short, if anybody was watching. So Lub also nice big ugly reversal. Save also kind of a reversal around the 20-day. So a lot of these, you saw some of these up today. They could have been viewed as shorts. So crystal balls. And actually, well, I'm not going to get into that, but I have a crystal ball, but any other part of my anatomy is made of titanium. So just so you know, workday I thought was a short at the 200-day, and it's coming in. Earnings come out, I think, at the end of August, so that would have been short right at the 200-day here, and it's coming down, bounces up to 65-day exponential. Look at all these moving averages. So it's kind of stuck in all these moving averages. So if it rallies up to one, that's probably shortable there, and take it from there. So somebody says, I also have a small spec play on Tesla heading into earnings. Your acerbic opinion is welcome. Well, I'll try to be as acerbic as possible. It's like, I wouldn't be holding this stock into earnings, frankly. You have a nice double top. You see how you get a nice gap up, looks like a bottle gap, then they slam it down. I think you're just playing earnings roulette. If you have some sort of options position and you can control your risk pretty well, you might do that. But you could see this thing drop 50 bucks, perhaps as easily as you could see it rise 50 bucks, but not really my cup of tea. It looks weak to me. It looks like it's topping out here. I like the stock down here at 203. If anybody, you want to go back to the webinars back then, I liked it then. I liked it at 227 about a couple, 3 weeks later, and it's gone higher. In my view, this has had its move, and it's now right up near the old highs, and it's kind of looking like a big pod. Maybe I can make it look less like a big pod. I'll make it look, nope, can't really do that. Let's try this. Let's scale. There we go. How's that? Doesn't look so bad now. But that can be seen as a big pod, mainly because you have the breakdown here and then a very rapid run up. And so you're going to run into some overhead here. You know, and the double cup sort of thing, the double D formation, as I've called it in the past, might be problematic for the stock. We'll see. ABBV, ABV. What is there to say about it? It's holding above the 10-day. What's your stop? Are you using the 10-day as a stop, the 50-day? That's really what it boils down to here. What it's going to do from here, I don't know. Maybe it's going to go higher, maybe not. Somebody says I am about a third of the way through the new book. Excellent material. Oh, is that the short selling book, Gar? Is that it? Oh, thanks. Lad. Yeah, Lad is one that had a pocket pivot yesterday. I don't know. If you want to buy it, I guess you could buy it, but I'd give it a tight, you know, put a tight leash on it. It doesn't look all that viable to me. It's kind of a choppy name. It has just trended higher. So if you give it some leeway, maybe it's actionable. But again, I'm not really that interested in buying anything right now. I'm very wary of this overall market. So ABMD, I had a nice run based on your pocket pivot. I sold half. Time to sell the other half. You mean down here? I don't know if you want to. It depends on, you know, don't ask us what you should do. Figure it out. Are you using the 10-day as a trailing stop? Is your price objective being hit in terms of what you thought you might get when you place the trade? I would say think for yourself and don't rely on somebody else to tell you what to do, least of all us. I mean, you know, I make a lot of mistakes, and the idea that somehow I can give you some magical advice that might be better than what you can figure out on your own is kind of stupid as far as I'm concerned. Everybody has a brain, and I think the mind is much, much, much more powerful than any of us really give it credit for, and I think we underestimate ourselves too often. And things can be figured out if one simply applies some common sense and some discipline to their trading. So if you bought on the pocket pivot, I guess it's down here. What was your price objective? Do you have 10, 15% on it? Is that in this market? Is that something you want to think about taking? Do you think maybe it'll go higher, so you'd rather set some sort of trailing stop to just push you out just in case it doesn't work out? So, you know, you got to think of it that way. Oh, that's what I'll tell you. You know, you think about what your objectives are for the trade. What do you think about the prospects for it now, and how that would weigh with respect to setting a trailing stop, okay? So if you sold half, great, you just took a nice profit, and now what are you going to do with the other half? You're going to let it run, you're going to set a trailing stop somewhere below where it's trading now so that you can at least lock in a profit on that second half now that you really banked a nice profit on the first half. So you got to think of it in those terms. Anyways. Somebody says, one thing I've learned from you is to look for wedging volume on either up or down moves. That's good. Yeah, that's, you know, classic wedging type action is always suspect. Let's see. Earnings tonight on LAD will probably not hold. Is that right? No, someone's asking. Oh, ABBV. Yeah, I guess you know, if you want to play earnings roulette, you have a big enough profit on this. I don't know. Maybe you bought it down here somewhere. I suppose you could bank that. Market Smith shows ABMD as cup with buy point of 76.90. So Can Slim people are watching it. A cup with a buy point. I don't know. Yeah, to me, okay. This base recognition or pattern recognition, it's just a bunch of BS that they want to sell you. So I don't give it any credence. I don't care what label you want to put on a base. I don't care if you want to tell me this is a cup. To me, this looks like a pretty deep cup, and it may be prone to failure. What this thing is doing at the point of impact on the daily chart is much more important to me than what sort of label I can slap on this. And personally, I think if you need something like pattern recognition, you are incredibly lame, because you should be able to figure out patterns on your own and at least develop enough expertise to do so, rather than relying on some dumb program to tell you what a base is, you know. So I think this thing is way up there. It's had a big move, and you're in this big ugly cup. It looks more like a toppy sort of situation than meets the eye. So what are they doing now? They're trying to rally the market. That's because I said I didn't want to buy anything. Still, everything still looks kind of weak to me. Any other questions? I'd like to get back to my trading personally. So if there are no other questions, I don't know. I think I've been pretty clear on where I stand right now. That could change, and I think it's just a matter of monitoring where names are within their patterns and deciding what you're going to do on that basis. Dr. K, do you have anything else to add? Do we have any other questions?
No, I think we're good over here. Yeah, just going to continue to trace out the markets as they hand us data. But yeah, I really like what I'm seeing with the XIV. That's for sure. That was a bit of a surprise, because I would have thought that it would have gotten. Well, I wouldn't have thought it would have been enough for the year, frankly. And it's made that 16% in a methodical way. I see how it's doing it based on my algorithm. So I'm very pleased.
Good deal. Anyways, that's all we got, you guys. So thanks for showing up. Hopefully this was helpful, but I think you do have to be cautious here, and as far as I'm concerned, it remains a bifurcated market. So if I see something setting up, which I don't see right now, I may take a shot on the long side, and meanwhile, I got some shorts working for me a little bit right now, and we'll just see how that pans out, and that's all we've got. So over and out. Have a great weekend, everybody. Next week, I'm out on vacation, and it's not clear what sort of webinar we're going to do. just to let you guys know, maybe do an after hours one, because the market's open at 3:30 a.m. In Hawaii, where I'm going to be vacationing. So we'll see how that all works out. But I know some of you guys like the after hours stock hunting sort of webinar, so I might do something like that, or we might do something like that next week in lieu of a morning intraday webinar. All right. Okay, guys, take care. We'll catch you next time.
So long, everyone.